My name is James Chen. I'm the Chief Technical Strategist at FX Solutions. Please excuse me. I am a little bit sick, so my voice may be a little bit hard to hear or hard to understand. Anyway, this is my daily analysis, finding high probability trading setups, and it's my monthly webinar that I do here on fxstreet.com. So let's get started. What I'm going to do today is, what I usually do, which is give you a brief background on how I approach the market, the strategies that I use to trade foreign exchange, and also I'm going to be showing you some interesting things that I see on the charts, as well as a spreadsheet that I've made up that has to do with one of my concentrations or focuses right now, which is strength and weakness pairing, and I'll show you exactly how I use that. Okay, so before we get started, very quickly, we have an important notice here. Forex trading involves substantial risk of loss and is not suitable for all investors. The information contained herein is solely for informational purposes and should not be construed as trading advice. Okay, as I was saying, I'm the Chief Technical Strategist at FX Solutions. I've traded actively as a private trader. I'm a CMT, CTA. You can find my chart of the day on fxsolutions.com and fxstreet.com, and also my blog at fxpath.fxstreet.com. And I've authored these articles in such magazines or publications as Forbes.com, Futures Magazine, Technical Analysis of Stocks and Commodities, etc. Now, what I was saying before when my mic was off was that in November's issue of Technical Analysis of Stocks and Commodities magazine, which I think is off the newsstands now. It's into the December issue already. But in the November issue, you'll be able to find my article on strength and weakness pairing. Okay, and then also on SFO magazine, which is Stocks Futures Options magazine. It's actually an online magazine now, but you'll be able to see that in January I'm coming out with yet another article based upon the principles of strength and weakness pairing, which I'll talk about today, and I'll show you my spreadsheet today as well. Okay, and also I'm quoted on a regular basis by Reuters News, Dow Jones, Associated Press, etc. I have 2 books out, Essentials of Foreign Exchange Trading and Essentials of Technical Analysis for Financial Markets, just both published pretty recently in the last couple of years, so you can take a look at those. And I have a DVD set with fxstreet.com, and it's called High Probability Trend Following the Forex Market. So you could definitely take a look at that. Okay, so let's get started. These are my primary trading principles. I know I see a lot of familiar people on this webinar, so I'm going to try to go through this as quickly as possible. And then I'm going to show you the real stuff, the charts, and my spreadsheet, etc. But just to quickly go through this, these are my primary trading principles, and it all boils down to one thing, which is seek high probability opportunities. That's what I'm looking for. Everything that you see here, everything that follows this, all comes down to this first one: seek high probability opportunities. Every single thing I'm doing, whether it's trend, strength, weakness pairing, multiple time frames, confluence, support and resistance, volatility, consolidation breakouts, etc., and risk management. It's all about seeking high probability opportunities to enter the market and opportunities to exit the market. Okay, so all of this comes down to this very first principle. Okay, so hopefully that makes sense. And then I'm going to go through each of these very quickly, just to show you exactly what my approach is. But just remember that what I do and what you should be doing is seeking high probability opportunities. Okay. Now, trend. This is one of my main focuses, because I am a trend follower. I am a trend trader in the forex market. So currencies tend to trend often and for prolonged periods. Why not take the path of least resistance? If there is a strong trend, why not trade with that trend? Okay, if there's not a strong trend, then you could avoid trading the market. But if there is a strong trend, why not trade with that trend? Now, wherever possible, I trade with a strong trend. Okay, wherever possible, meaning when I see an opportunity when things trend, I will always avoid trading against a strong trend. Okay? I will trade with it, but I will avoid trading against a strong trend. Okay? What I like to do is trade consolidation breakouts, which I'll talk about in a second, and retracement correction breakouts, and I like to trade in the direction of the trend. Okay, and one of the main ideas of substantial profit are the smaller pieces. Okay, so here we have just an ideal trend. Okay, an uptrend here, and then a downtrend there. Nothing fancy, very straightforward. Trend is extremely important, at least to me. Okay, now strength-weakness pairing, and I'll show you exactly what I mean in a second. Now, strength-weakness pairing, and again, this is one of one of the things that I've really been looking at in the past several months, and it just makes a lot of sense to me. Now, unlike in any other financial market, as you all may know, spot currencies can only be traded in pairs, and this is a state advantage. And you always hear about people's weakness. In the currency market, can you buy strength while simultaneously selling weakness? Okay, and that sort of magnifies or even doubles the directional potential of any position, if that makes sense. Okay, so if you're buying the strongest while simultaneously selling the weakest, you've got a strong. Okay, now strength weakness can be measured by percent price change against a basket of single currency, exactly what I mean on my spreadsheet. Now you could weight this basket, like for example, you could say the euro and the US dollar are heavier than, quote unquote, heavier than the, let's say the Australian dollar or the Canadian dollar or the Swiss franc, okay? I just keep it simple. I do not weight the currencies, okay, but you can certainly do that. For example, the US dollar index is certainly, the U.S. dollar index is certainly weighted. It's you take the U.S. dollar, you compare it against a basket of currencies, but it's a weighted basket. Okay, but the way I do it is different. It's going to be unweighted, and I'll show you exactly what I mean. Now, the strongest currency, the simple principle is that the strongest currency can be paired with the weakest currency to result in a robust trading position. So let me go ahead and turn to my spreadsheet now. Okay, hopefully you can see that. Okay, this is the spreadsheet that I use. And this is in real time. So if you could just please ignore this time frame that says since last night and since last month close, because those have not been updated, so just ignore all these. Just look at what's in orange, okay? So this is since last week's close, okay? Last week's close, the end of last week's trading. I'm looking for percentage price change of each currency against all of the others, okay? So what do you see here? But and then you have all these different numbers in here. Simply what they're trying to do, what these numbers are doing is comparing each currency to each other. So if you take a look, I have a live feed. I have a live feed right here, okay, and I have a feed capture. So this is updating in real time on real time pricing that you could do. If you need some help, you could let me know, and I could actually, what I'll try to do is I'll try to do a webinar on exactly how to create something like this. But basically, what it is you're just into what's strong is the weakest. Now, I'm going to talk in a second. Let me go ahead. Let me turn back real quick to my PowerPoint. Okay. Now, so strength and weakness pairing is very important. Now, we go to multiple time frames. Multiple time frames. And now I do have a multiple time frame strategy that I talk about on occasion, which is you take 3 different time frames. And what are you doing with these time frames? You're seeking agreement. Okay. Now, going back to that spreadsheet I just showed you, you could combine multiple time frame trading and strength-weakness trading. So what are you looking for? You're looking for agreement. That's why I have these different time frames. So, for example, since last night, ET is Eastern Time. Since last week close, since last month close, those are 3 different time frames, okay? And I could have this, although these have not been updated last night and last month, but I could have this showing me at any given time if there's any agreement among the different time frames as to which is the strongest and which is the weakest currency, okay? So it's very simple and short term, and you're looking for agreement in one direction, okay? And that to me is very high probability. Same thing with the strength and weakness. If you have a long-term, on a longer-term basis, let's say that the euro is strong. On a medium-term basis, the euro is strong. On a short-term basis, the euro is strong. Then what do you have? The euro should be pretty strong, and you could take the take that agreement and translate that into a position, okay? And a position could be long euro against something else, whatever's weak, in those 3 different time frames, okay? So that's an extremely powerful way to trade, and and I will do some more talks about exactly that. So I have this spreadsheet running alongside my charts at all times. Okay. Like I just mentioned, combine multi-time frame agreement and strength weakness pairing. So, for example, euro weekly, euro daily, euro. I'm not saying that. This is just a illustration. Dollar weekly, dollar daily, dollar hourly is all down. Then what's the conclusion? You buy euro dollar. Okay. It's very simple. Okay, Confluence. I talk about Confluence a lot. Very quickly, I know a lot of you have heard about this. When you're talking about this, you're just looking for areas where more than one technical factor provides rationale for a trade entry. And I'll show you that on my charts in a minute. The more support there is for a trade, the higher probability that trade will tend to be. So, for example, you've got a horizontal support level coinciding with an uptrend support line. You see that very often, okay? If those come together, then perhaps there will be a bounce, okay? Or if there's a breakout, that breakout should be strong because it's breaking out below 2 different support factors, okay? Much by the same token, and I'll show you this on my British pound against U.S. dollar charts. For example, coinciding with a minor 30, if you have a coincidence of those types of levels, then that is a stronger rationale for getting into a trade. Okay, moving average support coinciding with the uptrend support line, etc. So that's all Confluence, and that's one of my main principles. Also, support and resistance, of course. If you're a support and resistance trader, you know what I'm talking about. This is support. Trading off of support and resistance is trading off of pure price action, and this is besides trend, it's probably my most important criteria for getting into trades. Okay. Using support resistance as triggers to get into trades. So I'm talking about both horizontal lines as well as dynamic trend lines. Those are all support and resistance, and I use those as entry zones or triggers to get into a trade. Okay, and bounces or breakouts can be used in this capacity. I use entry filters, and many people ask me what do I mean by that. Entry filters. That's how you get into a trade. You're not going to get into a trade right when okay, because you don't know what's to get you in. Something has to happen, but how I usually denote them is through prior market turns. But you could also use, a lot of people use Fibonacci, and I do as well. Pivot points some people use, and other methods. There are many other methods for denoting support resistance. Okay, and I'll show you a bunch of Fibonacci levels on my charts as well. Consolidation breakouts. All these, if you look at, these little diagrams here, all they are breaks of consolidation, okay? Breaks of support and resistance. When you take a look at it, what is a descending triangle but a downtrend line, a downtrend resistance line, and a horizontal line. And you're looking for a break, okay? Downside. Descending triangles, just as an example, descending triangles are usually bearishly biased. But I really don't care about that. If all I'm looking at here, the theory of it is that descending triangles are bearishly biased. Ascending triangles, both that is, so get too caught up with these names and the theory of technical analysis. It really, what you're looking at, just keep in mind what you're looking at. You're looking at price, reaching a point of balance, of indecision, of, hesitation, and you're looking for a breakout of that. And that's what I generally look for. So I'm looking for consolidation breakouts. Also, retracement breakouts. So, for example, if this flag here, Okay, so it's not only consolidation, but it's also a slight retracement. And that's great. So that's why I'm always looking for flags and pennants and that type of thing, because I'm looking for price after a move to retrace a little bit, and then I'll get it on the next move within a trend. Okay, so very important, consolidation breakouts. Forget about the names. Keep in mind you're looking for breaks of support and resistance within a trend. Okay, volatility. Volatility is simply the foundations of volatility trading strategy are the concepts of momentum and range expansion. And if you take a look at what I was just talking about, those chart patterns, you're looking for range expansion. Okay, first you have price getting into a little area where there's a lot of consolidation, sideways chop, back and forth motion. You're looking for range expansion for increased volatility in the direction of the trend, and that's that's very very important. This is based upon the assumption that in trends, low volatility follows high volatility and vice versa. What we're basically interested in is high volatility following low volatility. And let me see. So yeah, as I mentioned, chart patterns are simply areas of diminished or diminishing volatility and just waiting for a breakout with high directional volatility. Okay, key tools for measuring volatility include Bollinger Bands, chart patterns, trading ranges, etc. Examples of volatility trading, the Asian range breakout. Oftentimes you'll see, and this used to be really popular. Oftentimes you will see during the Asian range there will be somewhat of a trading range, and then you're looking for the European or the London session for a breakout of that, and a lot of people used to trade that. Trading dips and uptrends or rallies and downtrends as examples of volatility trading. Breaks of tight horizontal trading ranges, Bollinger Band squeeze, these are all examples of volatility trading. Okay? Now, another principle that I use, and I'm going through this pretty quickly because I know a lot of you have heard this before, locking in gains, I tend to, for example, when I get into a trade and the trade is going my direction, I will very often move my stop loss to break even after the trade develops. Okay? And it's a great way to avoid losses. Very closely tied into that is using manually trailing stop losses, in order to lock in further gains. So basically what you're doing is, after you set to break even, once price continues to go into your way, then you raise, in the case if you're long, you raise your stop loss. And you keep doing that theoretically forever. And wouldn't it be great if that was the case? So what you're doing is you're locking in your gains while protecting your downside. Now, both of these practices, not only are you locking in gains, but you're also diminishing stress and emotions when you're trading. It's a great thing. Risk management, very, very important. I'm not going to really go through this too much because I want to get to my charts. Stop losses. This is a very simple diagram, I know, but basically, what are you doing? You're getting out of a trade when price is telling you that you're wrong, and that makes the most sense. So if the market is telling you that you're wrong, then that's the place where you get out. And in this case, and this is a really good, really good example here of a downtrend. Okay, it's really precise. Of course, you're not always going to see this, but it's very precise. And I wanted to show you here. I did this on another webinar where I have, I could draw lines, but I'm not sure how to draw lines here. If you take a look at this, and this is a real chart, it's not drawn or anything, it's an actual historical chart. You take a line and you draw support lines underneath all of these retracements back to the main downtrend line, and you play breaks to those, and it just works out amazingly well, as it often does. So that's one of my main strategies is to play breaks of counter-trend retracements in the direction of the trend. Okay? And as you can see here, where you place the stop loss when price is telling you that you're wrong. And this might be one place to put it. Okay, so putting it all together, what I like to do is I like to combine trend determination on multiple time frames with strength-weakness pairing and volatility breakouts. Okay? And always stress the principles of good risk management, and this is a winning combination. Okay, so let's get to my charts. If you have any questions, please feel free to type them into this window here. What's the difference between, Adrian says, what's the difference between pennant and symmetrical triangle? Okay, real quick. let's get to that before I get to my charts. Oops. Okay, pennant is like a flag. Okay, it's like a little triangle on a flagpole. Okay, you've got to move in one direction. Let's say you have a move up, and then a converging consolidation into a little triangle. Okay, and then what you're looking for ideally is a break in the direction of the trend. Okay, a symmetrical triangle is triangles are usually larger than pennants, and they don't need to have the flagpole. Okay, and what it is it's just a convergent consolidation, and you're looking for breaks of support or resistance. On the top is resistance, on the bottom is support, and all you're doing is looking to break in either direction, and that could be a bona fide signal to go long or short. Okay, so hopefully that answered your question. That's the difference between pennants and symmetrical triangles. Okay, let's go ahead and go to my charts real quick. Okay, what are we looking at on the currency pairs? Lots of interesting things going on here. I did this as my chart of the day yesterday. This is euro dollar, and if you take a look here, it's just very, very it's very interesting here. Let me just take this question here. When will you be disclosing how you created the Excel with live feeds to determine strength and weakness? Next webinar. Okay, I'm going to give you my email address at the end of this webinar. Okay, you can feel free to email me, but basically, I'm gonna plan on doing a webinar to talk about specifically about strength and weakness and talking about that Excel sheet and how I use that in my trading. Okay, so I'll plan to do that. I just thought about it today, so I will plan on doing that. I wouldn't call it a holy grail, but I don't think there is a holy grail, but it's pretty helpful. Okay, so this is euro dollar. What are we seeing here? Okay, once again, this was my analysis for yesterday, or one of my main analyses for yesterday. You take a look at this bottom here on euro dollar. This bottom was at about in early June. Okay, so that's when we turned into an uptrend. Of course, we didn't know it was an uptrend until after this bottom, but it turned into an uptrend nonetheless. Okay, so you have this uptrend. You've got this run here, okay, and then you've got a 50% retracement. Okay, whether you call them Fibonacci retracements or just a 50% retracement, that's what it is, and that's very important. Now, what do you see here? We got another run here, and then we come down to the 50% retracement. So really, really interesting stuff here. Now, what I'm talking about, what I was talking about yesterday was that we are still in a bona fide uptrend on euro dollar, and until price action tells me otherwise, we're still in an uptrend on euro dollar. Okay, and price has not told me otherwise yet. So I'm still in uptrend mode on euro dollar. Okay, despite this big retracement. But when you take a look at this big retracement, and this is a big fast retracement, it just came down to the 50% retracement line. So it's not, by any means, it's not a huge, deep retracement. Although it looks really red and bearish, it's not that deep. So we came down to the 50%, which is just above 134, and then we retraced from there. I'm sorry, we corrected that correction, okay, and we're coming back up now. Now, what I was talking about yesterday was that I would like to see a big break above 137. If there's a strong break above 137, I'm targeting initially 140 as my possible target to the upside. Okay, so if there's a big break to above 137, we're not seeing it this week, okay, because it's Friday, but if there is a big break to the upside, then once again 140, and then possibly I'm looking for a possible retest of this long-term high at 142.80. Okay, so if you take a look at many different things telling me that we're still in an uptrend. This is a daily chart, by the way. You've got this uptrend line here that is far from being broken. You've got this retracement that's only gone to the 50% level. I was looking for it to turn at 38% level. But it went a little bit further than that, and it hit 50 before it turned. Okay, is it going to go up? I'm not sure, but I'm looking for a break above 137 and then targeting initially 140. Now, if you take a look at this from a Elliott Wave perspective, if any of you are Elliott Wave traders, basically what you see here is you've got this, in terms of this uptrend here, you've got the first wave here, second wave here, third wave, which is long here. You got a fourth wave correction here, and then ideally we'd like to go on and hit the fifth wave, okay, which we may be in the midst of doing right now. So either way you look at it, if you're looking at it from Elliott wave perspective, from a trend line perspective, or you're looking at it from a Fibonacci retracement perspective, we're still in an uptrend on euro dollar, okay? And what's going to tell me that we're no longer in an uptrend? Possibly a break of this trend line, a strong break of this trend line, or a break below 61.8%, okay, which is around 132. A break below 132 would tell me perhaps this trend no longer has legs, okay? Yes, Adrian, on the way of wave 5. If you are an Elliott wave trader, yeah, I mean, this looks like we're on the way to going to wave 5 on this uptrend. Okay, so that's euro dollar. Now, this is pound. This is pound dollar. This is also a daily chart. Let me change it to my 4-hour chart. Hopefully, you can all see that. Let me redo this here. Okay, so this is, and you're going to see a lot of, I do make pretty heavy use of Fibonacci's as well as trend lines and, chart patterns, etc. Okay, so if you take a look here at the British pound against U.S. dollar 4-hour chart, you could see that once again, and I wrote about this the other day. There is look at this trend line here, and there was a pretty precise bounce off this trend line. Okay, and this occurred after, you see here, this is a triangle pattern. Okay, now this is an ascending or ascending triangle pattern. Now, what are ascending triangle patterns? Where are they biased? To the upside, right? It broke to the downside. So I don't care about the theory. I'm just looking for a breakout in one side or another. It consolidated, and it's going to break in one way or the other, okay? A chart pattern is only good as good as this breakout. If there's no breakout, if a chart pattern was never broken out of, then it means nothing, right? So we're looking for breakouts. So as you can see here, we just turned at this uptrend line to possibly continue this uptrend in British pound as well, okay? But this occurred after this uptrend line was broken to the downside and this chart pattern was broken to the downside. Okay, it retraced all the way back to this less steep or shallower line, and then it bounced from there. Okay, and I was looking to target 160 on that bounce. Okay, so when it was back here, it was a short target at 160 because that was an important level. It went way beyond that. Went up to 161. Okay, I'm still generally speaking bullish on British pound against U.S. dollar because of trend, because we're still in an uptrend. Okay, so I'm looking for, if there's a break above 161, I'm looking for, for a short-term trade, a target at 161.80 or so. Okay, so if there is a re-break to the upside, yeah, we've seen some bearishness, in these couple of hours. But if there's a re-break above 161, once again, I'm looking to target, around 162 or 161.80 to be precise. Okay. So that's British pound against US dollar. Now, this is, wait, let me just take a look real quick. Okay, and let me show you euro dollar. Now from a trend trading perspective, if you take a look at this, trend, there was an opportunity. You have a retracement here, okay, and there's an opportunity to play a break of that retracement. Also, if you right here, you see an opportunity to play a break of this retracement as well. So we're in this, a break of this retracement is probably around the break of 137, like I mentioned. And if that occurs, then, possibly we could be looking at 140. If you're bearish on euro dollar or British pound against US dollar, that's fine as well. But right now, the charts are not telling me that it's being very bearish. Okay. So let me show you dollar yen real quick. This is dollar yen, long-term downtrend, broken to the upside. Now, this was the intervention move right over here, as you can see, from 83 to 86. That established very strong support and resistance there. Okay, so right when it hit 83, the intervention moved it up or moved the yen down to 86. But as we can see here, we've formed a reversal pattern here in this trend. Okay, this was a bottoming out, and then a break above 82 was actually confirming the break of this reversal pattern, or confirming the reversal pattern. Okay, and I also have a little triangle here. Okay, it was a little bit of false break to the downside, but then boom, it moved back up. It broke above 82. It broke above this long-term downtrend line. It broke above 83. Okay, now whether you're bullish or bearish on dollar yen, that's up to you. But I happen to, after this breakout above 83, I happen to be bullish on it. Actually, after it broke out above this line, I was bullish on it, and then I was looking for a breakout above 83 to possibly target 86 to the upside. Okay, whether that happens or not remains to be seen, because right after the breakout above 83, we've just seen a bunch of consolidation. But I am, mildly bullish on dollar yen, and I'm looking for, to target around the 86 area. Yeah, perhaps a cup and handle agent. Okay, but that is, but to me, this is sort of confirming a possible reversal in dollar yen. Okay. Okay, now this is dollar Swiss daily chart. We got a downtrend here. Okay. Now, after it broke out above that downtrend line, we have what the beginnings of what may be an uptrend channel. Okay. So break to the upside, and then you got two hits on the bottom. You got sort of one hit, possibly another hit here. So this looks like a pretty good beginnings of a channel. Okay. So that's dollar Swiss. Okay. This is Aussie dollar. So what we have here is this is a 4-hour chart. Just a lot of we just keep going back and forth, above and below parity. And right now we're just in sort of a choppy whipsaw mode right now. But essentially speaking, we haven't really broken the bullishness, the uptrend. We just keep going up and down, and it's sort of in a sideways consolidation. It has been for quite some time now, generally speaking, despite the fact that it did hit a very, very, very long-term high up here at around, just shy of 102. Okay? Very long-term, I think it's, I forget how many years, but long-term high here on Aussie dollar. But generally speaking, I'm still bullish on Aussie dollar. So if we are to break out above parity once again, I'd like to see a possibility for a move to the 102, a retest of the 102, the all-time high. Okay, not all-time high, the long-term high. I want to show you one thing here, Carl. I'm not sure I saw your question. I think I answered most of these questions here, but. Okay. How do you determine a breakout? Do you wait for a candle to close outside the area, or do you wait for a close and then a retest? Okay, great question, Carl. That's what I was basically talking about when I talk about entry filters. Okay, so how do I determine a breakout? Usually, how I determine breakout is I'm looking for. Wait 1 second. I'm looking for price to break out and close, and depending on the time frame you're using, I look for price to break out and close, let's say above a resistance level, okay? And then once that occurs, I'm looking for the next candle to surpass the extreme, in this case the high extreme of the breakout candle. And that to me is a pretty strong filter, because what is price telling you? That second candle is telling you that, yes, it broke through resistance, and momentum is still continues to be in the direction of the breakout. So that's generally speaking what I look for. So a breakout, a close beyond the break, and then beyond the resistance level or support level, and then for the next candle to surpass the extreme. So surpass the wick or the shadow of the breakout candle. Okay, and then that's when I like to go long or short in terms of breaking out. Okay, but you bring up another point here. Do you wait for a close and then a retest? A lot of people do that as well. You may lose out on many trades by trying to wait for a retest, but a lot of people, and myself included, believe that a retest or a pullback after breakout increases the probability of that trade. So if there's a breakout, a retest, and then a move beyond the extreme of where after the breakout took place, then that to me is a pretty strong breakout. Okay, so once again, let's say for example there's a breakout of resistance, and then price hits a peak, and then comes back and retests that resistance level, and then surpasses that peak once again. That to me is a good possibility. Okay, how many Chop? How many pairs do you listen simultaneously? If you mean how many pairs do I look at simultaneously, I look at all the majors. I look at euro dollar, British pound against US dollar, dollar yen, dollar Swiss, Aussie dollar, dollar Canada. But then I look at the crosses as well. So let me take a look here. So euro pound, euro Swiss, euro yen, pound yen, Aussie yen, etc. So I'm looking maybe at around 20 different currency pairs. Okay, but mostly I'm spending most of my time on the majors, the dollar-based pairs. Do you ever look at euro pound for strength versus weakness? Yeah, let me take a look at euro pound real quick. Okay, a very interesting thing. We're running a little bit late here, but very interesting thing happening with euro pound. This is a 4-hour chart of euro pound. We've got a uptrend, a break of that uptrend, a very clean break, a great possible play if you had caught this break of euro pound. Okay, and then now we're in a very strong downtrend. Right now we're going back and forth between two levels, around 85.50 and 84.50, so about 100 pip trading range. Okay, I'm looking for a possibility of a continuation of this downtrend, which to me would be a breakdown below very strong support here at 84.50. Okay, this is extremely strong support. You see a double test here, or even more than a double test here of 84.50. A breakdown of that in the direction of the general trend that we're in now would be very nice for a possible short trade. Okay. Okay, let me just show you one last time. So what I often do. This is my spreadsheet again. Your question regarding the strength and weakness. Yeah, I'm always looking at least these majors: the dollar, euro, yen, pound, Swiss, Canada, and Aussie. I'm looking at all of these for their relationships, okay, and how their relationships change over time, okay, and in different time frames. So yeah, I'm looking at euro pound, and you look now, and euro is very strong, and pound is very short, is very weak, is a little bit weak. So, or it has been in this last week, and you see that manifested on the chart as well. But this is just another way to look at it. Individual currencies, which is so important that you've got to look at individual currencies and see what, generally speaking, is strong and weak compared to the others. Now, as I was saying before, this is all on an unweighted basis. Okay, this is all on an unweighted basis. I do that for a specific reason. I could weight these. Okay, euro, dollar being stronger, but I believe that the unweighted basis gives a better overall view of strength and weakness. Okay, so anyway, yes, you know what? I do put out some a weekly post on these which one's the strongest, and I rank them. Okay, so you see, dollar's the strongest. Swiss is the weakest, and then I'll rank them down from there, and you'll see it on a couple different websites. Okay, but I think I've run out of time here, so let me real quick. And someone asked for my email address before. Let me give it to you right now. Okay. Any additional questions? Feel free to contact me by email. This is my email address, jchen@fxsoul.com, jchen@fxsoul.com. If you want a copy of this PowerPoint presentation, feel free to ask me for it. I'll send it over to you probably next week. Okay, and then check out my chart of the day, fxsolutions.com, as well as my blog at fxpath.fxstreet.com. You can check out my DVD and my book. And thank you, everyone, very much for taking the time today to listen to me talk. And thanks a lot, and I hope everyone has a great holiday if you're in the U.S. And feel free to contact me anytime. Thank you very much, everyone.